All right, well, I'll just get into it then. So, me and Diamond both played this one this was Tuesday, 10-3, 10-5, sorry. We both played this. This is a perfect example of how we use our EMAs, and we'll show you guys how to set these up. So, we're on I use the 5-day, 5-minute. He does as well. I think this is, at least for the lengths that we use on these EMAs, they work out the best for resistance levels and all that. So I'll just show you guys. Oh, wrong button. So this is how you're going to put them in if you're using Thinkorswim. You want to go in here, search moving average exponential, how it shows up here. And then you just go into your settings and change your length from 8, set in 21. I use the 50 as well. I color code them too, which you can or can't do, doesn't matter. But here's a perfect example of how we use these. So you'll see in the Discord, a lot of times we don't play much until at least like 9:45, 9:50, because we like seeing the trends confirmed before we jump into something right at open. Because as you can see, here's your opening candle. Well, this is your opening candle, and then at 9:35, like you get a lot of pump fakes. We ran up and down almost like 2 points here in one candle. You just get a lot of volume coming in, so it's hard to really detect the trend. So we'll sit here and wait, and as you guys can see here, so my blue is my 8, my purple is my 21, and the gold is my 50 here. You get a lot of weird action here in the open. It looks really bearish to start. And the way we use these is we look for crossovers for confirmation. So the 8 is going to track your candles the closest, because the 8 only tracks the most recent 8 candles, the 21, the most recent 21, etc. So when you're only tracking the price of the most recent 8 candles, it's going to track tighter than the 21, which has 13 other candles to follow before it. As you can see, like when we get this bull flow moving up, this 21 EMA is still accounting for 13 candles back in this region, while the 8 is only tracking these close ones with 8 recent ones. So the 8 will track the closest. So we like to use these to find crossovers. So typically when the 8 crosses over the 21, and then I play the 50 as well, when you get all these crossing over, that is kind of like a confirmation for, in this case, it would have been bearish if you get a crossover from above to below. Or as we played this here, once you get this explosion up and you see your 8 dips under both for a quick second, and the very next candle this candle crosses back over all 3. So usually in this consolidation area, when all your EMAs are really tight, it's not a good place to enter. You want to wait for confirmation and see some separation so you can get a defermative action on which way you're going to play this, because with all this consolidation, this could have broken either way, and you don't want to get trapped in one way or the other. So if anything, if you have a lot of consolidation here, maybe it's a good place to enter like a strangle and just not know which way you're going to go. Cut one of them once you get a confirmation. But if you're only going to play this one way, this would not be a place to enter. But once we get this candle here, right at 9:45, we break above all 3 EMAs. You now get the 8 gapping back up above the 21 under it and the 50. This is textbook like bull flow here. You have the 8 above the 21, above the 50, and you're riding this on the way up. This is when you would maybe at this like 9:50 candle or 9:55. This is when you would want to look for it. If we were extended here, you would have waited until you got this pullback down to the 8 to find support, and this would be a good entry place. And then as you can see, the way these work, like every single candle will extend up and then test EMA. And then this ran, I mean, this was like perfect. You had no worries in a day like this. This ran above the 8 EMA all day long. Even here, we get a big red candle down. Like, had you not used your EMAs, you'd be worried, like, oh, the trend's ending. Like, I want to exit here. Don't want to get trapped holding. As you can see, like, this falls, taps the 8 EMA, and goes for another 2 points. And then, again, so you get a crossover under the 8 here, find support at the 21. So this is kind of how we play these. Like, if you break the 8, maybe scale out some on your 8 break and hold, like, half your position, and look if you get support at the 21. And then say you were to break that, I mean, then your next support would be the 50. And so on. So this is kind of how we play those. And then vice versa, like when you're going to play the reversal here, as you can see, like this got a really great run at open and then kind of went rage bound for most of the day until the PM volume came in before close, like right around 3:15 here. Now at this candle, we were riding the 21 and the 8 for supports all day. This was perfect bull flow. Now we break both. And I don't want to zoom in here to mess it up because I suck at it, but as you can see, like right here at this 3:15, 3:20 candle, your 8 now crosses under your 21. This would be your first indication that we're turning bearish, because now your 8 is under your 21, showing your flow coming in that way. And as you can see, this found support at the 50 before holding that for a little bit. And then right here at like 3:45, now your 8 breaks under the 50. which would be another like even more strong confirmation that this is going to turn bearish. And as you can see, the next 3 candles absolutely like knife down like almost 3 whole points here right before close. So that's kind of how we use these. Whichever flow you're going to play these, they act as strong supports, and you're looking for that confirmation of one breaking above the other and holding that as your support level. So like this is about as textbook as you're going to find. The 8's above the 21, which is above the 50, and you're riding the 8 for support all the way up. That's like the perfect bull flow you can look for here. And then similarly, as you can see, this played perfectly on the other way down. Like the 8 crosses over the 21, the following candle is drop. Now you're under both and you're holding the 50. The 50 is your last level of support here because under that you have no EMAs under you. So now you would play this at this 8 crosses over both here. Your 8's the lowest, absolute bear flow. And then now this 8 would act as your resistance upwards. If you were going to look for the bull reversal out of this bear trend, your 8 is now going to be your resistance. Once you break the 8, you're going to have to break the 21, break the 50. And then you would look for that 8 to now cross back above all of them to be your confirmation to enter long again.
Yeah, I think realistically, like what you're talking about is important. Like, it's not just for managing like your entries to your exits. It's also like, I mean, not just to manage your entries. It's also to manage your exit because realistically, like you said, when you get an ugly looking candle, you immediately sort of think about the downside in terms of like, I want to protect the profits that I currently have, and maybe you get spooked out of, holding a call longer than you should. And I feel like the EMAs really help with that risk management aspect in terms of, how do you treat your runners? How do you know when to get out? I feel like the 8 EMA, using that as your first line of defense in terms of, okay, we've run a little bit here and now we're testing the 8 EMA. If I get a 5-minute close below that, maybe I'll scale some of my position. But until then, you might as well just let it run because like you said, like on this play right here, you would have gotten, a lot less of a gain had you just taken it out the first time you saw red instead of using your EMA candles to, confirm the trend moving forward.
Yeah, absolutely. And then, I mean, say you get scared and you exit on that red candle, your instinct is then you're going to see this go up and then you're going to be enticed to chase because then you exited too early. And that's really when the bad trades come into play, is when you start chasing because you didn't have confidence in trusting your TA to begin with. Now you're chasing the gains you just missed. That's usually when the losses come in, which is always what you want to avoid. And I know we get asked this a lot in the Discord, like how do we, because we're not exactly like scalp traders, how do we have the confidence to hold trades so long? Like this is how, because in a day like this, we didn't break our underlying EMA support once for almost 2 hours here. Like this is how you have confidence to hold these until if we're bullish in this, and what we were in calls in the Discord right here at like 9:50 we entered. Until we break this underlying ADMA support as we're running up, I really don't have any worry to scale out. So I don't know when we probably exited here on this ADMA break up at like this is 2 hours later. We probably got over a bag on these. So say we scaled out 50 here. Now we held the 21. Once we hold the 21, I'm still going to hold my second position, my second half until we break at least the 8 and the 21. I mean, especially the 50. If you're under all three, you definitely want to be fully out. If you were bullish, you want to be out of your position there. But that's kind of like how we have the confidence to take these because I have nothing telling me otherwise. As long as we're finding support on the ADMA, I'm not going to really pull anything. I don't feel the need to. And as Diamond was saying, like this is kind of how you could manage for your exit positions. That would be a good place to exit. Like we always say in the Discord, like ADMA test here, 21 EMA test. That's what we mean by that. Like when you're extended from the EMAs, you should expect like a test at least. You're going to retrace at least to the ADMA here. As you can see, we did this probably like 3 times on the way up. So if we're saying ADMA test, like that's when we're prepping, like say we break it, that's when we're going to scale out.